Hey traders, Nick here looking at the retail earnings week. We have a whole bunch of retail companies reporting starting tonight and tomorrow. So we have Home Depot, we have Lowe's, TJX, Best Buy later. So a whole bunch of them. Some I like, some I don't. Home Depot I like. This is Home Depot right here. I'm not an expert on the fundamentals, but I know the big picture, and so specific plans they have, I can't tell you that, but I can also speak to the chart. So this is a chart that where the recent range is tightening, and something's going to happen, and appropriately there is an event right here. So take your pick, whichever scenario will play out. I took a small upside scenario, and I'll probably take it off because I don't have edge on it. I think it's going to rise, but I'm not sure how the weather played into them, how if they have any exposure to China. So I don't have edge, and I don't like to gamble. If I don't know which way it's going to go, I'd rather stay out and play after the fact. So if it gets hit, then that'll be my take to take it up. Now there are some other things I don't like, which like BBBY. Sorry. Best Buy. BBBY I also don't like. But Best Buy, it's the only game in town, and it keeps struggling. So there is something to be said to have some physical contact with the stuff before you buy it, but people buy big stuff without touching it all the time. So above 70, this could get really interesting. It'll go to 72 and then 74. This is a point of interest which will be resistance. But below 65 and change, let's call it 66, it could close the gap. What gap? This gap right here from this earnings. So let's see how it behaves on earnings. Down, meh, and then up, and down. So really, coin flip, more downs than ups. I don't have any inclination to go long for this one. So maybe there is a better way to play the trade. First of all, actually, before I go, Lowe's. If I wanted to play Home Depot earnings, maybe I'll do it through Lowe's, because if I buy calls or puts for Home Depot at the open, if I picked wrong, that money is gone. But if I do it through Lowe's, they're going to move the same way. Then I get to live a few more hours because Lowe's event hasn't gone, so the premiums in the calls and puts in Lowe's are still there. Yes, it'll be less than what I bought it before, but it won't be completely dead. So perhaps look at playing Home Depot through Lowe's, or better yet, a complete blanket trade on the XRT. So this is the daily XRT, which is the retail ETF. One of them. I'm sure there are more. So interesting to see that they're trying to hold the line at 42. But if they lose it, then they go down further. Where to? This 41 is the round number. If you think about it, the Christmas crash was 38. So anywhere between 41 and 39 are the breaks. So they're going to fall into a safety net, technically speaking. So you have a very tight situation here in the XRT. I don't like to buy straddles, but this almost makes me want to. So you're trying to hold the bottom. So if that bottom falls, they're going to go this way, and I'm going to draw a big box right here. Well, somewhere around here. And then you have lower highs, lower highs, lower highs coming to a pinpoint with an event coming. So they may do this. This would be level 1. Actually, this would be a little mini level 1, level 2. This will be definitely resistance, because this is a ledge. They tried to hold it, they failed. It's a zone that's pretty big overhead supply. We knew that, we drew this line that it would go lower, and that happened. So the XRT is probably the best way of doing it. So what's a straddle? It's when you buy the put and the call at the same place. It's expensive, but you need a big move in either direction. If they fall completely apart, if they rally, then you make money. If, let's say, it costs you $2 to buy the straddle, I don't know how much it is, I haven't checked it, then you need a move of at least $2 in either direction for you to win. Otherwise, you lose money, and the market maker will win. So what are my inclination here? I'd probably play the XRT, because I don't have any inside information as to what they're going to say, the management, and more importantly, how the market is going to react to it. I can't imagine they have a good story to tell. So retail is not my favorite, and just because they have so much against them. First, they have everything else that the market has, plus they have their internals. They're still struggling with the Amazon. They haven't figured it out. Not so much Home Depot. That's why I would rather trade Home Depot on a dip than try to catch an upside call on it. So the retail trade is the short-term trade is probably best played with the XRT. This is a weekly chart of the XRT to show you what's below current levels. So every candle is 1 week, and it shows you that this whole zone below where we are right now has been pivotal. I'm going to go to monthly to see where that red spot came from. So on a monthly chart, this is even, it shows you the importance of this level right here, which is also still below where we're at. So one can say that the bulls have solid footing below. But then again, if that level breaks, you have even lower lows. Is that possible? Anything is possible. But this means that the stock market in general would be really, really in dire straits. That's my opinion. So it's not the likely scenario, in my opinion, even though I don't like retail. Now you can argue that I'm full of it because, you know, there are some stocks like JCP, which reports also one of the first bunch that reports. They say invest for the long term. I don't think so. Just a monthly chart since 1999. So some things don't come back. There's no reason to expect this one will come back. I know nothing about it. They could have something fantastic brewing, but I'm not sure. If Macy's can't do it, JCPenney can't do it. That's my opinion. So who do you bet on? You can't unless you really know, and so you go back to the XRT. And then you have to see who's inside the XRT. So let's go see. The XRT components look like the distributed, I don't know what that is here. They're distributed evenly. There's not one big thing. You got Children's Place, Five Below. I don't know what that is. CarMax, so Carvana, Amazon's in here. So equal weighted looks like, and nobody dominant. So it's a good gauge, and you're not going to get hurt if, you know, Home Depot gets hurt. Like if Apple gets hurt, the whole Nasdaq gets hurt. Like today, Apple is down 3.5%, which is probably roughly some, you know, down 0.5% on the Qs all by itself. So in this case, the XRT might be the best way to do it. But then again, the reactions on earnings are completely binary, meaning it's coin flip. We don't know what they're going to say, and we don't know how the market's going to react to it. I've seen stocks get hit 20% on great reports, and I've seen stocks like GE rally 6 or 7% on crappy reports. So who's to know? All right, Nick signing up. Oh, if you like more of this stuff, email me, and I can hook you up with more of the content live and inside the chat room as well. Let's see, where's my email? The cheap way. So sellspreads@gmail.com. sellspreads@gmail.com. Nick signing out.